My name is Layla Andrews and welcome to my weekly analysis for the week commencing 13th of August 2017, and today I'm going to be looking at Aussie dollar, Euro dollar and GBP. So let's start with Aussie dollar. First thing I want you to notice is that we are at an area of key significance, and that would be the round number of 0800 and also the 50 EMA on the monthly chart, and this is where the monthly bar for July actually stopped. It actually held underneath those two key points. So we need to bear this in mind. That's actually a fairly significant obstacle that the market has to deal with, and quite logically it has rebounded from this point. So now we're going to look at the weekly for a little bit more detail on that. And if you just let me put this in the correct place, you can see that that's exactly what's happened. And interestingly enough, on the weekly chart we're actually converging onto the 200 EMA, which also provided a third element of this section of the chart, which needs to be dealt with before we can actually continue any further. So at the moment what I'm seeing is price action which has burst out of a consolidation period which went on for some years, and has actually for the first time in the last 3 weeks has actually come through this, taken out all of these spikes that would have also been slightly problematic for it, but it needed to take these out, which it did do. And we had a very strong momentum bar here for 3 weeks ago, and we've had good solid buying into this current resistance point which I'm discussing at the moment, which is the 0800 level, the 50 EMA on the monthly and the 200 EMA on the weekly. And the reason why this is interesting is because this gives us an opportunity to see price pull back and potentially give us a higher low on the outside, i.e. above this range that has recently broken out. So I've put in a couple of places where I think that this price might be trying to do that. Now first off is where it's actually bounced from, which is connecting with this particular high here, which is the highest point of all of this range. And the next point of interest, should it break through here, would be the 10 EMA on the weekly chart. So that's at the, let me just tell you what price that is. That particular price for the 10 EMA is at approximately 78.80, and the one that is currently stopped at the moment is approximately 78.35. So those are the two levels for Aussie dollar that you need to be aware of in terms of places where price could be trying to attempt to pull back from. Let's have a quick look at the daily just to see what the further detail on that is. Let me find the right place. And at the moment you can see we've actually got quite a strong bar which ended Friday, and this bar has reacted very strongly to this point here, which connects quite nicely to this little tiny bit of high just here on the left. So here's an area where price has clearly bounced and it's pushed itself straight into the sort of soft resistance level that's occurring just here, which is just above it, which is approximately just below the 79 level, and that's also connecting with the underneath of the 10 EMA. So what has been providing plenty of support is now actually presenting itself as a resistance EMA. So at the moment we need to see price show us that it means to move higher, or that it needs to perhaps put in a lower high in order to come back down to test this level here at the 77.80 zone, which is also connecting with this 50 EMA. We may find that the pullback occurs here, or it may need to go down a bit lower. But what I would say is that with a bar like this on the daily, it wouldn't be inconceivable to see a small amount of continuation on this particular momentum that we've acquired here for Friday last week. We may well see that price needs to come up a little bit higher and perhaps give us the lower high that I would like to see as confirmation that this level is settled. Otherwise, what we might need to see, and this is going to be occurring on a couple of other currency pairs as well, so they're all doing quite similar things at the moment, but what we may need to see is it needs to attack this level again and fail. The second failure, therefore, perhaps producing the more depth of pullback that we would need in order to pick up extra buying to power through this particular level, because don't forget this is made up of three very strong elements: the 50 on the monthly, the weekly, as the 200, and we've got the 0800 level. So there's a lot going on here at the 0800 level. So levels to look out for at the moment are the current support level, which is at 07835, and then the next lower level, which is at 7780. In terms of support, the resistance, as I say, is 0800. So let's now move on to euro dollar. Euro dollar, interesting enough, looks slightly similar to Aussie, because quite a lot of currency pairs have spent the last 2 to 3 years caught in a range. So in recent times, as they have all burst out, there's a renewed sense of direction as to where the markets might be going. And interesting enough, they have seemingly reversed the previous sentiment which they've come from, which in this case was selling. They've ranged, and now they're looking more towards the bullish side. This was particularly interesting from the point of view that the 50 was pretty close to the range high, which is at the 1.15 level, and so this particular momentum that took out this level, once it got going, it was almost like it had so much power. It's actually moved it straight through the 50 without any kind of resistance. So now this is looking much more like an area where we may be looking at a bit of support. And interestingly enough, the 50 has actually come underneath where price action currently is. But of course, we can't actually read this this little red bar at the moment because it's not finished. This is the August bar, so it's still in the middle of being built. Let's have a look at the weekly and see what that tells us. And we have here a 200, more or less in the same area as the 50 EMA on the monthly. It's slightly lower down, but as you can see, what we had in terms of the previous week's bar, which was a strong reaction to the 1.19 level, and there is reason for this. It's not just a random price level, and I need to show you exactly where that is on the monthly. The reason for that is that this high has connected with this low here, which dates back to the sort of very late half of 2009, beginning of 2010. So this is now an added element that it's got to deal with, this low. So this is a fairly good line in the sand for the market to have pushed into and rebounded from, to take a bit of a breather, for people to sell off, for other people to get into the market to go short. There's many reasons as to why the market would have rebounded from that point, but everybody needs a line in the sand, as I say, that they can put a price on so that they can take a position. And interestingly enough, we get this strong sell-off. Now, these kinds of bars, although typically they're seen as seller bars, they're seen as bars that would automatically convert into a move lower, and in fact we have one here, although it is red and it's a little bit bigger, but theoretically these have a similar kind of response. What's different about this, though, is you've got to remember what it's come from. We've been caught in a big range for some years. We have recently started cycling out of it, and we've burst through the resistance at 1.15. So this is a big deal. There's an awful lot of commitment to this direction. So if I see a bar like this after a momentum move like this, where we have cycles and we've got all the EMAs coming up very sharply underneath price, I wouldn't be convinced that this is the beginning of a big pullback. I would want to see something in the region of either a lower high or a retest, and judging by the current weekly bar that we've got, this is looking much more like it's going to try and attempt to retest this level, if not even break it, because there is quite a lot of momentum to the bullish side here. So let's have a look at the daily and see how that is giving us a bit more detail. Sorry, will I just get this in the right position? And as you can see, this looks like it's setting up to go and attack the 119 level. It's really not that far away from it already. So this particular move is just following recent cyclicity. This is a perfectly logical thing for it to do, even though it's met an obstacle. In many respects, this is just an opportunity for the market to take a little bit of a breather, pull back, pick up some more buying, and go for it again. So this is why we have to be a bit thoughtful about the very first momentum move out of a range, that it may still have quite a lot of that momentum left, and as far as it's concerned, it's still following the rules of an uptrend. There's nothing here to stop it from doing that. It's making higher lows and it's making higher highs, and all the EMAs are in the right order. We're also looking at the daily chart, which is a really good go-to chart for any time frame that you might be whether you prefer to trade longer term, or if you prefer to trade hourly and 4 hour, you'll need to know what the daily is doing. So at the moment, the daily looks like it's going to head up to 1.19 for another attack. Interestingly enough, if we actually do end up with a lower high, which to be perfectly honest with you, I'm not convinced that that's how this is going to pan out right now, simply because it looks like it has done a nice neat pullback into the 20 EMA, and looks like it's setting off again. It even double tested it with two long-tailed bars here. So in many respects, this looks like it at least wants to try and match the previous high. So the level to beat at the moment for euro is 1.19. This still looks pretty bullish. If we fail here, then we may see a deeper retracement, which may see price then connecting with the 50 EMA back down to the 1.15 level. But that's a bit of a long shot in terms of the fact that I need to see how price is behaving at 1.19, because there is a lot to be said for the fact that this market may well be able to break through here. And don't forget, it's also dealing with this level because it is a longer term, higher time frame low that caused a strong reaction in the market to reverse completely from selling, reverse into a buyer's market. So this level is important, but we need to watch out what it's going to be doing here. So this is the level that you need to be looking at, 1.19. Okay, so now let's move on to the onto GBP. GBP, again, similar sort of setup in terms of had been in a downtrend, has created quite a strong floor, and actually I've just noticed I'm on the wrong time frame, so I need to go back to the monthly for this. So we were in a downtrend, we've created a bit of a floor here, nothing like the length of time that both Aussie and Euro spent building their particular range floors, if you like, their bases. They carved out those bases over a number of, as I said, 2 to 3 years. So this is really just a few months in many respects. It's not, I don't think it's even quite a year at this stage. However, what is of interest to us is that this is quite different to what we've previously had in terms of pullbacks. These were fairly logical sort of sharp pullbacks that are part of a move down sharp pullback, whereas this is actually consolidating at a level of support. So this generally means that there's been a change in sentiment. It does look different to these, and it has behaved differently. We're seeing a lot more buying in this market, and to the best of its ability, it is trying to get higher. Let's go a little bit closer, and you can see a bit more of what we're talking about. So with this particular market, what we've done is we have broken out of a tiny consolidation that was made up of approximately 6 months worth of price action. This was the bar that broke through, and this course being the range high just along here. So that looked like we would effectively be starting the process of cycling higher, and it's been trying to do that. However, at the moment, and when we look at the weekly, I'll explain a little bit more about why this looks a bit strange. At the moment, we're dealing with a couple of problems here, one of which is the round number at 133, plus we've got a 20 EMA on the monthly chart, which we are quite close to charging into, although that's not actually what has stopped price at the moment. Price, when you look at it on the daily and the weekly, you can see it hasn't actually tested this pink level. And the lower time frames give us a little bit more indication as to why this level is of interest, but it's also to mark out for reference where the 20 EMA is when we're looking at the other time frames, because you can sometimes forget where they are. So the 20 EMA on the monthly is actually at around about the 1.33 level. So when we look at the weekly, we will see that there it is, because there's no 20 EMA showing for the monthly. So it's quite handy if you want to know where some major obstacles are that are nearby, that you have you pick a color and you pick a line that you use to remind yourself of where those higher time frame EMAs are, because they can really mess up your you're trading, if you think you've got a really good setup, but actually what you're basically doing is buying into a brick wall, you really want to avoid trying to do that. The other reason why I like this level, not just because it's a round number at 133, but it also was an area where price consolidated quite strongly. It was a bit spiky, but overall it opened and closed below this level, so that's important too, which would give us a little bit of a heads up that this might be a zone to be a bit wary of. Now, what I'm finding interesting about this is that after this particular floor that it's created, and we can see this a little bit more clearly on the weekly chart, it has started to cycle higher, and really from this point onwards, because it effectively is now retesting the range tops, if you like, this should have really got going, and it didn't. It actually started to consolidate sideways and give us quite a curved top. Now, what also should have happened was that there should have been a lot more distance created between this high and this high, and they're actually quite close together. So this implies to me that there is a lot of selling pressure involved in this market. Even though it is trying to buy up, there is, as you can see, more red bars than there should be. We should have had a much more defined, clearer line of green bars that actually went into this obstacle in a much more definitive sort of way. Whereas at the moment, what we've done is we've barely been able to test the 132 level, and we've actually, at the minute that we did, we've actually rejected that, didn't quite make it to the 133, and now we've got this tiny little pullback into the tops of the 50 EMA on the weekly chart. So we've got something here which is cycling, and it's making higher highs and higher lows, but there's not a lot of momentum here. So this market looks like, if it does make another attempt to go higher, because this little weekly bar certainly looks like it would like to. Let's go a little bit nearer so we can see a bit more of that. Where are we? Oh, I can't make that any bigger. I'm sorry, apologies. MT4 has its limits. But this is a little bar with a little sort of rejection tail on the end of it, which is testing right onto the top of the 50 EMA. Just so you know what kind of price action we're looking at. This would imply that perhaps it was trying to set up to make another go at this level at 132. If we can manage to do that, if we can get to 132, then this is going to be a bit of a deciding factor as to whether this is creating effectively a matching high which fails. Now, if it does fail, usually after 2 attempts and the second attempt fails, you usually see a bit of a deeper retracement, a deeper kind of reaction to the market levels that it's met. And in this case, the 132 certainly is the level we've got to get past before we even think about getting to 133, which is where the 20 EMA is on the monthly. So there's quite a lot to get past for pound, even though it's sitting on top of a 50 and using it as support, and it's cycling higher. We don't have a lot of momentum here, and we can see that because these bars are literally flipping between red and green, and they're not looking particularly strong. And as I say, there's not a lot of distance between this high here and this high, and really after this sort of consolidation and range, to escape out of that, you would have expected price to literally explode up, but it hasn't. So yes, just be wary of that, and we are currently sitting on 1.3. I think if we get below 1.3, then that will then become the level to break. So levels to break are 132, 1.3 if we get below it, in terms of the weekly chart, and because we probably will find that on the daily, which we get a little bit more information about, what we might find is that because this is sitting on the 50 EMA, we might find that this tries to produce a little bit of a high, maybe matching this high here, which brings us into approximately 131. So we may see that. This is certainly providing a bit of downward pressure. We're caught in a bit of an EMA sandwich at the moment, and this is where things can get a little bit difficult to read. But there's 2 ways this can go. Either it pretty much goes sideways and fails to go any higher and actually ends up going lower from where it already is, or we get a little attempt to match this high here on the left at 131 and effectively giving ourselves a head and shoulders sort of pattern. And there we might see that's where price fails, and then we go lower. But as to whether it could get as high as 132, it just looks quite a weak market looking at the weekly chart, so it doesn't look very strong at the moment. However, there's an awful lot of news coming out this week for quite a few currencies, but particularly for pound and for USD and also for euro. So these particular markets are, all of them, very susceptible at the moment to fundamental information that seems to be driving the market more than it used to in the past, and we go through cycles where that happens. Sometimes the technicals don't pay much attention to the fundamentals, and other times they work in unison. And in this occasion, sometimes the technicals look like it's going to do one thing and the fundamentals can send it another way. So just be a bit wary of when some of those data releases are coming out. Okay, thanks very much for listening, and I look forward to speaking to you next week. Bye bye.